Okay, let's dive into this. Every single person who enters the world of trading, they pretty much start with the exact same vision. It's that universal dream of ultimate financial freedom, right? No boss, no office, no limits. We've all pictured ourselves as that ambitious beginner sitting in a dark, blue-lit room late at night, studying charts on a laptop, just pulling profits out of thin air. But as you're going to see in this explainer, the vast majority of folks who chase this dream, they never actually achieve it. They walk in hoping for total freedom, and instead, well, they find a total nightmare. So today, we're unpacking the dark reality of why so many incredibly ambitious people just crash and burn in the markets.
Now just take a look at this massive 95% slice dominating the screen here. That is the actual failure rate in the trading industry, 95%. That's just a staggering number, isn't it? Now, you might be wondering why. People usually assume these traders lose their money because, I don't know, maybe they're lazy or maybe they just aren't smart enough. Or maybe, and you see this all the time on online forums, they think the market is just this giant rigged casino actively plotting against them. But actually, no, that's not it at all. The real reason is so much more dangerous, mainly because it's completely hidden in plain sight. Most traders fail without ever truly understanding why they failed. So let's start breaking down this hidden enemy.
Section 1. The dream versus the reality. The excitement phase. Now, what's really interesting about this slide is how it breaks down what happens right at the very beginning. In this initial excitement phase, a trader is usually celebrating some small profits, those green charts are rising on the glowing monitors, and everything feels, well, incredibly possible. The market just looks like this wide-open vault waiting to be unlocked. But here is the catch. The absolute most dangerous thing that can happen to a beginner is early success. Because what happens? They inevitably mistake luck, those completely random, unpredictable early wins, for actual skill and trading expertise. They think a few late-night chart study sessions have magically turned them into some kind of Wall Street prodigy. And that leads directly into a very predictable and very, very dangerous progression. Let's walk through these steps together. Step 1, the trader secures a small profit. Honestly, it feels amazing. But that small profit immediately triggers step 2. Overconfidence. Suddenly, they're standing in front of massive green charts, arms crossed, account balance growing, and they feel completely invincible. And because they feel invincible, they jump right to step 3, taking way bigger risks. They ramp up their position sizes. But since they're taking these massive risks without any real foundational skill to support it, it leads straight into step 4, much bigger mistakes. The crazy part? The trader doesn't even realize it, but they're building a highly toxic habit right from day one. They become addicted to winning, not learning. I really want you to let that sink in for a second. At this point in the journey, the trader is no longer executing a carefully constructed business plan. They're definitely not building sustainable long-term routines. Honestly, they're just chasing a high. Every single time they click that buy button, it's like they're pulling the lever on a slot machine. They are completely desperate for that next hit of dopamine that comes from seeing a green trade. Which brings us to Section 2, the ego trap, when arrogance takes over the desk. Just picture it. The trader is sitting there, totally arrogant at their desk, thinking about the giant green profits behind them, genuinely believing they've completely figured out the incredibly complex, chaotic puzzle of the global markets. But look at these symptoms popping up on screen. They are quiet, but they are absolutely destructive. First, those strict trading rules they swore they'd follow, suddenly those feel completely unnecessary. Second, risk management, which is literally the mathematical foundation of actual trading, suddenly feels so boring and restrictive to them. They want fast action. They don't want to do slow calculations. And finally, patience just completely disappears. The trader's ego quietly grabs the steering wheel and just shoves every last ounce of discipline straight out the window. But we have to do a harsh reality check here. The market literally does not care how smart you think you are. It doesn't care about your ego, it doesn't care about your confidence, and it definitely doesn't care about your lucky streak. The market is just this utterly indifferent machine. And let me tell you, it will punish ego faster than anything else on earth. Why? Because the market only cares about discipline. The second discipline vanishes, the market simply takes its money back. Moving on to Section 3, the real enemy within. It's not the market, it's you. Imagine staring intensely at these flashing stock charts in a dark room. The pressure is just mounting. Most failing traders are absolutely 100% convinced they have a strategy problem. They will literally spend thousands of hours and thousands of dollars endlessly tweaking their indicators, buying shiny new software, searching the internet for some magic moving average crossover.
But in reality, what they actually have is a psychology problem. Seriously, you can hand an amateur the most profitable, battle-tested strategy in the entire world, and they will still find a way to lose money with it. Why? Because their own mind is working against them.
And this brilliantly illustrates exactly how this psychological sabotage happens across these four major emotional poisons. Let's look at this together. First, fear. It causes traders to panic and sell a perfectly good winning position way, way too early. Then there's greed. Greed whispers in their ear and makes them hold on to a profitable trade for way too long, right up until it reverses on them. Then we have hope. Honestly, this might be the most dangerous of all. Hope causes them to completely ignore mounting losses, just sitting there praying the market will miraculously turn around. And finally, revenge. This causes them to make wild, aggressive, highly emotional trades just to try and get back at the market.
The chart isn't making decisions. Their emotions are. This is absolutely crucial to understand. Those glowing red and green lights flashing on their monitors, those are entirely neutral data points. That's it. It's the fear and the greed inside the trader's own head that's actually pressing the buttons. And let me tell you from experience, operating a financial account based on raw, unfiltered emotion, that is an extremely expensive way to live.
Let's turn to Section 4, the deadly cycle of failure, the trap that lasts for years.
I want you to trace this frantic progression with me step by step. It always starts with a win, which builds up that confidence, leading them to increase their risk. But here is exactly where the trap springs shut. Step 4. The charts suddenly crash. Huge, terrifying red candles print across the monitors, and the trader takes a massive loss in a state of absolute shock. But instead of just stepping away and breathing, they dive headfirst into Step 5, frantic revenge trading. They start wildly placing bets in this dark, intense trading room, making entirely emotional decisions, desperately trying to make up for all that red on the screen. Which, of course, absolutely guarantees Step 6, taking even bigger, more devastating losses. They wipe out the entire account. And then, they deposit more money and start the whole crazy loop over again.
It is just a tragic reality that most traders stay trapped in this cycle for years. Imagine that visual for a second, sitting alone in the darkness, head in your hands, just staring at a monitor displaying heavy losses after a massive downward crash. They are stuck in this endless loop. And it's not because they lack intelligence. Actually, many of them are incredibly smart people. They're stuck because they stubbornly keep trying to fix their strategy when they have never actually addressed the root cause of the failure: themselves. Section 5, the mindset of mastery. Let's move to and see how this builds into what successful traders actually do differently.
So, we're finally leaving behind that frantic chaos of emotional trading. I want you to imagine a totally different scene now. A professional calmly reviewing a trading journal in this warm, peaceful, cinematic lighting. They're learning from their mistakes, and they are completely detached from the outcome of any single trade. Notice how drastically different these survival tactics are from the amateur's approach. First off, they focus entirely on survival, not getting rich quick. Their absolute #1 priority: protect the capital. Because, well, if you lose all your chips, you literally can't play the game anymore. They ruthlessly follow their rules. They freely and quickly accept small losses as just the normal cost of doing business. And above all else, they control their emotions. It's a very cold, highly calculated, and fiercely protective approach to the markets.
And this right here fundamentally redefines what success actually looks like in this industry. The true goal? It is simply to stay in the game long enough to let probability work in your favor. Real mastery isn't about perfectly predicting the future, and it's definitely not about winning every single trade. It's about surviving the math. It's about taking enough calculated, high-quality setups that, over a large enough sample size, your edge just naturally plays out. Because at the end of the day, if 95% of traders are failing, it is absolutely not because success is impossible. No way. It's because most people simply refuse to master themselves. The market is actually remarkably generous, but only to a very, very specific type of person. It generously rewards discipline. It rewards patience. It rewards unwavering consistency. And most importantly, it rewards absolute emotional control straight through the chaos. So, as we wrap up this explainer, I'm going to leave you with this final provocative thought to ponder. The question really isn't whether you can predict the exact next move the market is going to make. Honestly, nobody can do that with absolute certainty. The real question is whether you can control your own behavior when the market moves against you. Because I promise you, the trader who finally masters himself, well, he's already beaten almost all of the competition. Thanks so much for joining me on this explainer, and I will see you next time.